Hey everyone, and welcome back to the channel. Today, we're diving deep into a tech giant that's been making big waves, Salesforce, ticker symbol CRM. If you've ever wondered how companies manage their customer relationships or how AI is changing business software, this is for you. Salesforce is at the heart of a massive shift in enterprise software, moving from the cloud revolution to what they call the agentic AI era. Let's break down what that means for investors and businesses alike. Section 1. The new Salesforce from growth to profit machine. For years, Salesforce was known for aggressive growth, often fueled by big acquisitions. But that's changed dramatically in the last 5 years. Think of it like a teenager growing into a disciplined adult. They've shifted from growth at all costs to profitable growth. What does this look like? Radical margin expansion, meaning they're making a lot more money from their sales, initiating dividends for shareholders, and massive capital returns through share buybacks. This isn't just a software company anymore. It's a financial powerhouse focused on giving value back to its owners. Visual aid suggestion, on-screen text. Salesforce, from growth to profit machine. Visual, a split graphic, one side with an upward arrow for aggressive growth, the other with a money bag and dividend symbol for profitable growth and shareholder returns. Section 2. What Salesforce does. The Customer 360 and AI brain. At its core, Salesforce helps businesses get a complete 360-degree view of their customers. This isn't just one app. It's a whole ecosystem of clouds for sales, service, marketing, commerce, and data. Now, they've repositioned this entire suite around something called Agentforce. Imagine AI agents that can perform complex tasks autonomously, without a human constantly guiding them. Think of it as a digital workforce. Their main moneymaker? Recurring subscription and support services, which account for about 94% of their revenue, giving them incredible predictability. Looking at their specific products, Service Cloud, that's customer support and AI-driven resolutions, has actually taken the top spot in revenue, surpassing Sales Cloud, which handles the traditional sales processes. This shows a big focus on keeping customers happy and efficient after the sale. Visual aid suggestion, on-screen text. The Customer 360 ecosystem, Agentforce, autonomous AI. Visual, an animated graphic showing different clouds, sales, service, marketing, connecting to a central Customer 360 hub. Then, an icon representing an AI agent moving between these clouds. A simple pie chart showing Service Cloud as the largest slice, then Sales Cloud. Section 3. The Money Talk. Revenue, profit, and shareholder returns. Let's talk numbers. Salesforce's revenue growth has naturally slowed as it's become a massive company, going from 24% growth a few years ago to 9% recently. But here's the kicker. Their net income, their actual profit, went from just over $200 million in fiscal year 2023 to over $4 billion in 2024. That's almost a 1,900% jump. This was their year of efficiency, proving they could be incredibly profitable. By 2025, they'd hit over $6 billion in profit. Now, about those shareholder returns. In a big move, Salesforce started paying its first ever quarterly dividend in early 2024. It's a modest start, but with a super conservative payout ratio, there's lots of room for it to grow. And they're aggressively buying back their own shares, over $7.8 billion worth in fiscal 2025 alone. They even took on $25 billion in debt in early 2026 to accelerate these buybacks, believing their stock is undervalued. This is a bold bet by management that their stock price will go up as AI pays off, boosting earnings per share for you, the shareholder. Visual aid suggestion, on-screen text. The year of efficiency. 1,900% net income jump. Visual. A sharp upward trending line graph for net income. A dividend symbol with dividend initiated, February 2024. Text. A graphic showing money flowing out of Salesforce to shareholders, buybacks, and dividends. Section 4. Standing tall market dominance and fierce rivals. Salesforce has been the undisputed one CRM provider for 11 years straight, holding about 21% of the market. That's a huge lead. But they're not alone. They face intense competition from tech titans like Microsoft, with its Dynamics 365, which integrates seamlessly with Office 365 and Teams, often offering a lower total cost for companies already deep in the Microsoft ecosystem. Then, there's Oracle, leveraging its strong database tech and fast-growing cloud infrastructure. Even SAP and Adobe are in the mix. Salesforce dominates CRM, but these competitors are chipping away at adjacent markets, trying to flank them. Visual aid suggestion, on-screen text. One CRM for 11 years, competitors, Microsoft, Oracle, SAP, Adobe. Visual, a stylized trophy for one CRM with Salesforce logo. A simple bar chart showing Salesforce's CRM market share significantly higher than competitors. Then, competitor logos appearing as threats around the Salesforce logo. Section 5. The future is AI Agent Force and Data Cloud. Salesforce has placed its biggest bet on the agentic enterprise, where AI agents connect a company's data directly to its customers. Unlike AI copilots that need constant human prompts, Agentforce agents are designed to be autonomous. They can reason, make decisions, and execute complex tasks across all Salesforce applications. They're even moving towards outcome-based pricing for these agents, charging for actual results, like successful customer resolutions, rather than just per-user licenses. And underpinning all of this AI? Their data cloud. This is the fastest-growing product in Salesforce's history, unifying customer data from all sorts of systems without needing to physically move it. It's the foundation for trusted AI, and nearly half of the Fortune 100 companies are already using it. Think of Slack becoming the central hub where these AI agents interact with humans, and Tableau providing agentic analytics, letting you ask questions like, "Why are my sales down in the Midwest?" and instantly get a visual, narrated answer. This is the future of work they're building. Visual aid suggestion, on-screen text. Agentforce, autonomous AI agents. Data Cloud, the foundation of trusted AI. Visual, an animation showing a human delegating a task to an AI agent, and the agent then executing it across different Salesforce icons, e.g. sales, service. A visual representation of zero-copy architecture, where data sources connect to a central data cloud without duplication. Slack and Tableau logos with AI integration concepts. Section 6. The catch: risks to consider. Despite all this momentum, there are risks. One big one is AI deflation. If AI agents become so efficient that businesses need fewer human employees to do the same work, Salesforce's traditional per-user pricing model could be squeezed. While they're shifting to outcome-based pricing, that transition could be bumpy. Competition from Microsoft and Oracle is also fierce. Microsoft's integrated ecosystem means a potentially lower total cost of ownership for some companies, while Oracle's database and cloud infrastructure are incredibly powerful. And finally, implementing these new AI tools and unifying data in Data Cloud can be complex and expensive for customers. If it's too hard, they might delay or look for simpler alternatives. Visual aid suggestion, on-screen text. Risks: AI deflation, fierce competition, implementation complexity. Visual: a question mark icon over a graphic of fewer people icons. Logos of Microsoft and Oracle with a rival visual. A graphic showing tangled wires or complex flowcharts. Section 7. Your takeaway is CRM right for your portfolio? So what does this all mean for you? Salesforce is at a crossroads, moving from its hypergrowth past to a more value-driven future. For value investors, it offers a massive, sticky customer base, predictable recurring revenue, a growing dividend, and management aggressively buying back stock because they believe it's undervalued. For growth investors, the upside lies in its AI bet. The explosive growth of data cloud and rapid adoption of Agentforce suggests Salesforce is successfully capturing the first wave of enterprise AI spending. If Agentforce truly defines digital labor, the addressable market for Salesforce could become much, much larger. The company is profitable, cash generative, and making a bold bet on its AI-powered future. While competition is strong, Salesforce's Customer 360 vision, now powered by AI, remains the most complete solution for large enterprises. Ultimately, if Agentforce becomes a must-have tool that generates new revenue to offset any potential changes in their traditional business, Salesforce is incredibly well-positioned to continue delivering strong returns. Visual aid suggestion, on-screen text, value versus growth investment case. Visual, a split screen. On one side, value investor, with bullet points, dividends, buybacks, predictable revenue. On the other side, growth investor, with bullet points, AI upside, data cloud growth, digital labor market. And with the Salesforce logo and well-positioned for the AI era. What do you think about Salesforce's big bet on agentic AI? Let me know in the comments below. If you found this summary helpful, please hit that like button, subscribe for more financial insights, and I'll see you in the next video.